So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you're doing. So, let's do this. 9th of July 2018. No trade calls, recommendations, or response for the own stuff. We're here for educational purpose only. Should be an interesting week here. We've got a lot of central bank speakers. So, basically, Kuruda's going to speak, Draghi's going to speak, Carney's going to speak, a lot of stuff this week. We also have a big Bank of Canada day on Wednesday with basically a rate decision. We'll have to see what's going on there. And again, some other data points. But the focus is really going to be in, are these trade tensions going to heat up again? Geopolitical, geoeconomic risk across the board. We'll have to be patient. Now, the other thing to keep in mind is we're going to start to see the financial companies report this week too. So Friday's a big day, or an interesting day, when we've got Citi, Wells Fargo, and JPM reporting. So where are we as we go into this this week? I mean, we've got into a situation where we've seen a lot of heavy flows. Right here is copper, very aggressive move down. And the other thing which we've been keeping an eye out on is reversal on some of the metals like platinum, and essentially the very, very heavy tone we've seen out of Asia. Now, we've said as long as Asia continues to trade heavy, we're likely to ultimately resolve to the downside. In the U.S. too, there's still a lot of risk that the market is not pricing in. You see Asia's really trying to stabilize here today. But essentially, unless we get the Shanghai trading back above the 3,000, inside this area still stays very, very heavy. Below this zone is worryingly heavy, right? So, as we said, usually if you look at the way these financials are trading, like if you go into Morgan Stanley, not really the picture of health. Very, very heavy move, but this is where it should bounce if it's going to bounce. That's why it's interesting as we go into this earnings, right? JP Morgan. Very similar chart. This is a good place for it to bounce if it's going to bounce. And the one we've been keeping an eye out for a lot more is Goldman Sachs. You see how heavy we've made it down into our first target here. And now this is a key zone. You see we had a lot of support here back at the beginning of 2017. You can look at it on a monthly and you can see how important this zone is, right? If we can't bounce off here, then it's likely going to be very, very heavy. So all things being equal, this is a decent place for the markets to try and bounce, with financials maybe taking the lead. So you have to be cautious. We'd still expect July to be a tricky month. We've got a lot of QT at the end of the month, but again, it's an interesting inflection point because we've seen some weakness in the market, and now after the back end of last week going into this week, it seems like the media or everybody is saying, okay, that's done. We're ready to bounce and we're going to go to all-time highs again. What do the equity charts look like? Well, if you look at the ES, that view could be supported, right? Because you see how we keep on holding this series of higher lows. So everything here is pointing to the market wanting to go back into the 2800. So this is going to be the pivotal level going into the week in terms of the ES. You'd expect the market to try and test those highs. If we get another failure there, it could get ugly. But the base case here has to be that, again, we don't have a crystal ball. So the base case has to be that the market's going to want to try and test these highs. If it can trade above, then very high chance we go and test the yearly highs. If we can't, then it's still ping pong inside this 2800, 2700. And if you look at the NQ, similar kind of pattern, except the NQ is stronger. It's been stronger all year. It's broken above the 72.14, so everything is pointing to those highs. And if you look at something like the Russell, which is very, very strong, it caught a bid ahead of where we would expect it to catch a bid, and it's had a very, very strong move. So again, everything is pointing to the market wanting to take a stab at highs, and that's what we'll basically have to keep an eye out for this week. Not so much if it's going to take a stab at highs, because that's what we would expect, is how it reacts at those highs. Now, another key week, and you can see how we're at an inflection point across the board, because if you look at the ZBs, if you look at this from this bigger picture, right, we said if they're going to hold, this is exactly where we would expect them to hold this bigger long-term channel. See how the buyers are coming in? So shorter term, this is going to be an extremely key level. Is, are we going to take out these highs again, like the equities? See, these highs are like the highs on equities, and therefore continue higher where the equities would break new highs. ZBs would probably try and come back into the 55s, 57s, or are we going to get a smackdown, and do we have more downside to be tested right into this channel, into the 123 extension of this move from A to B, which still hasn't completed, right? Is this going to be C and this going to be D, or is this going to be C, right? So again, we're at a key inflection point across the board, and you can see that on gold. Reminder, we're in our long seasonal trade on gold for the next couple of months, and we've seen a very, very nice reaction here on the weekly. This is where we are looking to get long. Nice little trade. If this holds, this low holds, we still expect this to come back into, at the very least, the 1300 mark. Again, we'll discuss this in detail today in the weekly session again, and that translates into the action on the DXY. As we said, if you remember, everybody was getting very excited into those highs, and what we said is, does it look strong? Sure, but you can't call it a range break until it's broken the range. So our base case expectation was that this failure was telling us that these stops need to get run, that this level needs to get tested, and if we break that, come back all the way into mid, and that would naturally translate into action on all the majors. Euro USD got a lot of flack for posting this chart on Twitter, but it is what it is, and our base case hasn't changed. It's a very nice trade here. Said failure to take out these lows, most important area is the ECB range. Failure to test this, take this out, would mean that we have to test the opposite side of the ECB range. So our base case is still that those 1850s need to get tested. And once these are very nice trading ranges, right? Because once we put this range off this low and the psychological level at the 115, this gave us plenty of opportunities to try and trade the long side all the way back into the 1850s. Tricky one because of Brexit headlines, but this is also translating into a nice rotation higher on cable, and the easiest way to look at cable is on a bigger time frame. If you look at it here on the weekly, see how it's trying to hold this rotation, and our base case is now that this is held, bar any crazy Brexit news, you would not be surprised to see this come back into the 136, 137s. Again, our preferred play here is euro. We're not so interested in cable. And just to look at one last major, yen, in terms of a bigger picture view on yen, this hasn't changed. We still expect this range to be a choppy area where the market has to resolve either for a break into the 114s or for the resumption of this move all the way back down into the 100. For now, our base case is not option A. Our base case is still option B. Okay? Hope everybody's going to have an awesome week. Thank you so much for listening, liking, and sharing. Have a great one. Talk to you guys soon. Take care. Bye-bye.